Hey y'all, it's Kristen. Welcome to the Tribe Podcast. Tribe is a resource podcast for entrepreneurs looking to build their entrepreneurial tribe. Over my years of working with business owners, I've realized that it's important to know who you need as a part of your network before you need them. Listen in as I ask my trusted resources the question you've always wanted answers to but didn't want to pay to get. If you're new to your business or you're established and you're just busy, feel free to borrow my tribe as you build your empire. Dun, 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 dun. It's time to talk about taxes. I know, it's the one you've been waiting for, but believe it or not, my friend Annie Fairchild is one of those people who makes taxes seem easy and a little fun. I strive to work with other professionals that speak to my clients in a way that makes sense to them, and Annie I have found by far to be head and shoulders above other CPAs. So I'm excited to be able to share Annie Fairchild with you.
All right. Today, I'm super excited to welcome one of my new friends, Annie Fairchild. I say new, but we were introduced a couple times over the years, and we finally got it together lately, and I am really excited to have her on the show. Hi, Annie.
Hi, Kristen. Glad to be here.
I'm glad to have you. So we've been talking about recording this episode for a little while. Of course, I'm in the financial planning business, and you could be one of my best partners because you deal with money also. So I'm really curious for you to be able to tell everyone on the show what you do and a little bit about your background. How did you get into the certified public accounting arena?
Okay, well, that sounds great. So I am a CPA, and I've been a CPA for about 28 years. And I got into this area because I really love helping people. You think, well, that's kind of odd. You just fill out tax returns or do some of these accountings, and that's not helping people that much. But we really do help people. We help people see what's going on, how they can be profitable in the business, how they're overpaying their taxes, and we need to restructure them to be better. Our heart is really for that entrepreneur that's out there and just starting, and there's no reason they should be overpaying taxes. So what can we do to help them to be smarter and to guide them and look at them?
I love that.
Yeah, we just really like helping people, and we've grown to, there's 15 in our firm now. We do taxes as well as consulting, accounting. We also do audits for our clients. We help them look at their margins, look at their percentage. So, what's going on? Because whether if you're selling lemonade at a lemonade stand or have a multi-million-dollar business, there should be a profit. So what's going on to keep that from happening? And then we go out and meet resources like you, Kristen, and other people that can also bring in a team to help our clients. Maybe somebody can help with expense reduction or help them to get a better contract in a certain area. Then we help our clients in that area as well.
So what made you decide to become a CPA in the first place?
Well, way back when I started in college, I thought, well, I like numbers. I like math, and I hadn't really heard of accounting before. And my dad said, well, why don't you try accounting? I was like, well, what is that? So he told me a little bit. I said, well, I like numbers, and what am I to do with a math degree? So I went in and tried that very first principles of accounting. When you go to that first accounting class, you either love it or you hate it. And I loved it. And other people are going, oh, I'm switching majors. I'm not doing this one for sure. But I loved it. I caught on right away, and I saw how we could work things and read those financials. And so kind of it started with that love for numbers in high school and moved on into college.
That's really interesting because you are one of the few people I know that has that love for numbers. And I tell people when I introduce them to you, I said, not only is she really good at her job, she loves it, and you can tell. So that is refreshing because a lot of times people think about CPA and they think like dull number crunching in a dark room. So there is an alternative.
Well, there is. And to be whatever job, anybody's in, which, you too, just loving, being passionate about what you do. Mm-hmm. And sometimes I feel like I'm more passionate than my clients are, especially later on. We'll talk about some of the new tax law coming in. I'm so passionate about it. And I know there's a lot of people, there's probably thousands, I would say over 1 million people that are going to be overspending or spending too much tax this next year just because they didn't plan right. And so that passion to help people and say, hey, this is what's going on. Let's help get you in a better position where you're not paying those taxes.
Yeah, so I think that's a good segue just to talk about the changes in the tax law. I know I've talked to some accountants that are pretty confused by it or just don't have an opinion on it yet. And most of my clients have no idea what's going on. What advice do you have, or what would you say to someone who's wondering what's going on with the new tax law?
Right. So, Kristen, we meet with people every single day. Every day I'm meeting with somebody, a potential client, or just somebody on the phone, or they're coming in here and has not been told about the new law, and they're not ready. Our clients range from that startup up to about $220 million in revenue. So all in that range, we've got different groups that work with the different areas of revenue or different kinds of businesses. But for example, I had somebody that's in the construction industry, and they're about a $70 million company. They came to one of our lunches and because they wanted to see what was going on. Well, their CPA had not told them they were not set up correctly. And if we hadn't changed them and changed some W-2s and how they're working their business a little bit, they would have overpaid $60,000 to the IRS this year.
Wow.
They weren't ready for this new 20% deduction. I think it's going to hit a lot of people. Like, there's a lot of realtors out there. Mm-hmm. You might know some, Kristen, that so if a single realtor is over the threshold amount, which is $157,500, if let's say they're doing good in their business and they make $200,000 as a realtor, well, if they don't have any W-2 employees, they don't get the 20% deduction. But so all we need to do is change a little bit for them, and they would have a very nice deduction for them. But I think many are going to miss out.
So when you say deduction, for some of my clients or friends or people listening to the podcast and they don't speak tax, what does that mean?
So the new tax law was very, very pro small business. When I talk about small business, really any business that passes through their income to the individual level. So not a C corporation, not your big Exxons and whatnot that are traded on the stock exchange. These are your small businesses that are owned by individuals. Those in the small business arena can qualify for a very nice 20% deduction on their tax return. So let's say a business makes $100,000. That business is going to get an automatic a $20,000 deduction. Well, that's huge. So if you're in the 25% tax bracket and you're getting a $20,000 deduction, that's $5,000 of real money right there, right?
Yeah. So you're basically getting some but keeping
right.
That sounds like a good deal to me.
Right. So this 20% deduction, it's available to many businesses, but it's available to some specified businesses only up to a certain income level, and then it phases out for them. But some people think, I've had people coming in here saying, oh, I don't qualify for the 20%. And I said, well, what do you really do? Well, let's just talk about what you do. Because they're like, oh, I'm IT consulting. IT consulting, well, consulting doesn't qualify. I was like, well, wait a second. Maybe you do. What are you selling? Are you selling training? Are you selling a server, space on a server? Are you selling equipment to them? What exactly do you do? And all of a sudden we realize, well, that client does qualify. So they've been told that they didn't because they thought they were consulting. But when we really talk about what they do, they're not really consulting. They're really doing some other things. And they do qualify for this 20%. I think that's a big question out there because a lot of people have heard about this 199A 20% deduction. And a lot of people think they don't qualify. Like realtors probably think they don't. Insurance brokers, they were probably told earlier they don't qualify, but they do. They are not in the carve-out group. Many other people that think they're consulting, they do qualify. So it's really on an individual basis on how much money they make and how much deductions that they have.
What other industries should be concerned about this? And maybe they just haven't heard about it yet.
Yes, I think people that are in the distributor group, so because we have some pretty distributors that are doing well, and a lot of times distributors don't have a lot of W-2 employees, and so they'll get the deduction, but it's going to be limited for them. So for them, we're tweaking that and increasing their W-2 pay. I think another group that's going to really hurt or be surprised is people in the construction world, because a lot of times people in construction, they hire subcontractors.
Right.
And they might only have the owner and maybe an admin, maybe one project manager as W-2 employee, and the rest of everybody's is in subcontractors. Well, they will qualify for that 20%, but it's going to be limited based on their W-2s that they pay. So those, like the example I gave earlier about this $69 million client, she didn't have enough W-2 wages. So we had to increase her W-2 wages, change some subcontractors over to W-2, and then just increase what was being paid of there. So she didn't lose out on the deduction. She could take the full deduction and be in a good position.
That's so interesting. I hadn't even thought about construction, so I'm really glad we're talking about this now. I've got a couple of prospective clients in that industry at the moment. So is there anything else we should know about what the IRS is looking for? What would make you more likely to get audited?
So I think in August, the IRS released about a 184-page document. It came from the IRS and was part of the Federal Register. And it said it started talking about reasonable compensation. Because reasonable compensation, it's always been required by the law. Reasonable compensation has, but nobody's kind of really paid just a whole lot of mind to it, because even though a higher reasonable compensation or a higher compensation salary would increase your Social Security taxes, it didn't do anything to impact the bottom line. It didn't change taxable income. Well, now for the first time, it is changing taxable income. It is changing what is there in that taxable income area. And so it did a little bit before also, but it's really impacting a significant number of people. So the IRS has said, we're going to hire a significant several thousand new IRS agents to audit reasonable compensation and salary from owners. We're also going to put up in Austin, we're going to have a task force that's going. And also, if you don't pay reasonable compensation, it changes your income, and your tax preparer doesn't do your return correctly related to that, we're going to put, and when you get audited, we're going to give an extra penalty on your tax preparer for not calculating reasonable compensation correctly. So I think there's many clients or many taxpayers out there that are not paying their S corporations, and they don't pay themselves anything, no salary at all. Well,
yeah, no salary at all, or very little.
Right, no salary at all. You're hurting yourself because you're not putting anything into the Social Security Administration, and that's going to hurt your Social Security check later on in life. Which some people think that we won't have Social Security in 15 or 20 years, but what's sad is that my clients now that are turning 65, they were thinking 15 years ago, 20 years ago that there's not going to be Social Security, and now they're wishing that their retirement Social Security check was a lot higher than it is, because it's very low compared to what some of their colleagues are getting. So it hurts you there, but then also reasonable compensation, it impacts the 20% deduction. It is very highlighted. I think there are going to be a significant number of audits coming out this year that are going to, people are going to get surprised with.
So if I have a lot of this type of client that maybe does $500,000 in revenue, and they're taking $50,000-$60,000 worth of what they're calling their paycheck, and then they're just running all their expenses through the business. And that's been the case for a while, and their accountant said it was okay because it saves them money on taxes. Are we talking about that kind of person also?
It depends on if they're paying themselves $50,000 and yet they're They've got distributions of $400,000, probably not reasonable, but the reasonable compensation word is huge. What do you do with it? How do you address it? What is reasonable compensation? And who can tell me what it is? That's been a question for years and years. And again, it didn't really impact, for most people out there, it didn't impact the taxable income. Well, now it does. Now it has a huge impact on it for a much wider group of people. I think what everybody's going to have to do is prove that you are giving a reasonable compensation, prove that you are paying yourself the right amount, and so limiting that deduction, that 20% deduction on the other pass-through income. What we did in August when this 184-page guidance came out to us, we were like, what do we do? What do we tell our clients? Mm-hmm. So we're encouraging our clients to find somebody that will do a reasonable compensation analysis for you. Or for our clients, we're actually doing it for them. We are running reasonable compensation reports. We have a database of about 13 million lines, and it's broken out by what somebody does, the zip code that they live in, and we're really kind of doing a replacement value. So if we have somebody in the construction industry and they actually pick up the hammer and they do some construction themselves, and they also do HR work, and they do some clerical work, and they do some janitorial work, but they're also their CFO and CEO of the company. We're kind of spreading that out and say, well, if we replaced you in all these pieces, what could we replace you for? So the database that we're using is quite extensive, and we've done it on our clients, and it's worked out really well. And now we have, if we do get an IRS audit, we'll give them our report. We have a good methodology behind it, and it would be hard to challenge, I think, because their methodology might be close to the same as ours. I'm not sure.
Yeah. So I know we're recording this. It's late November 2018, and someone might be listening to this, and it might be December or January of next year, and they might be thinking, my taxes aren't due until April. Is there a reason that they should be reaching out to you sooner, or what would you say to that person?
Well, absolutely. They need to go talk to their CPA or come talk to us or something, because a lot of people are going to be limited by their W-2 wages. So after 12/31/18, it's really too late to do W-2 wages. I mean, you could go back, it's really too late at that point to do W-2 wages. So people that are already into January, if you're in that position where you needed W-2 wages and you're limited by that, you're going to be overpaying the taxes in 18.
Okay, so really important to have this conversation in the next few weeks then, it sounds like.
Absolutely, as soon as possible.
Got it. So what else would you like to share about the work that you do? I know you all do tax planning, which I don't find to be common for all CPA practices. Do you want to talk a little bit about that, or is there anything else you think we should know?
Yeah, absolutely. So right now we are doing tax planning with most of our clients, everyone that wants to come in, and we're reaching out, those that haven't made appointments, we're reaching out to them saying, you do need to do tax planning because we do need to change you up a little bit. I think tax planning, if you're out there and you've never done tax planning before, this would be the year to do it. You're going to have to pay your CPA for that planning, but likely, if that CPA can save you even $3 or $4 or $5 or $60,000, that's way worth it, right? Mm-hmm. Or even if it's $2,000 that they save you, I would think that your tax planning would be worth it. We have a lot of, I've got a client that didn't call up for tax planning, and so I emailed him and said, hey, you need to come in. He is into IT consulting. He helps write software for several clients, and he does very well. He makes about $600,000. Well, he's set up as a partnership. So he pays himself guaranteed payments, not W-2 wages. If he didn't come in and we didn't change him, $600,000 times 20% is $120,000. That's a really nice deduction, right? Well, as of today, he doesn't get any of that, zero. Yeah. Zero deduction, because he's over a threshold amount. He must have W-2 wages. So he is coming in, thank goodness. He comes in on Friday, 2 days from now. And when he comes in, we are going to be changing him and restructuring and doing some things so that he can get that $120,000 deduction. That is a point in that story. If you out there are a partnership, you're taxed as a partnership, and you're paying guaranteed payments to all your partners, but you have no W-2 wages, well, guaranteed payments to partners do not qualify as W-2 wages. And so you could be in the same position as my client, about ready to lose a $120,000 deduction. And $120,000, he's at the 37% tax bracket. That's $44,000 he would have had to overpay the IRS on his tax bill for 2018. That's a lot of money.
That's a lot of money.
If you are a partner, yep, that is $44,000. I call it, you're giving a charitable contribution to our government, which is so generous of you. But you sure don't have to. You could give it to, instead of being forced to give it to our government, you could give that $44,000 to somebody else, right? To the charity of your choice.
Right.
So if you are a partnership, be careful. I can also see it. Let's say we've got somebody that's taxed on a Schedule C. Mm-hmm. And I can see this kind of a lot in the like realtors or insurance brokers. And so that person makes $100,000. Great. And they would get a $20,000 deduction. But let's say their spouse works at another company over here and makes $250,000. That puts them over this threshold. That realtor that makes $100,000 has got to have W-2 employees in order to get that $20,000 deduction. So it's real important. You can say, oh, just because you as an individual might be below the threshold, if your spouse brings in more money, or if you have a sale of investments or dividends or interest or other pass-through income that's going to put you over a threshold amount, you could be losing a lot of money.
Yeah, and the threshold is so low. There's so many people making that, over $157,000.
Oh, yeah. For this little example, there's a realtor or somebody on their Schedule C, or let's say you could be anything. You could, selling any kind of product or consultant or something, and you're making $100,000. Well, $100,000 times with a $20,000 deduction, and you're in that high tax bracket, that's $7,400. Mm-hmm. So by not going into tax planning and paying your CPA for a little bit of advice, you're giving the government $7,400 more money than you need to do.
No one wants to do that. I have not met the person that wants to do that, at least.
I know.
So it sounds like we've got a lot of reasons to want to call you or a CPA in our area. Is there anyone in particular? Do you have a particular market that you work with a lot of the time, or is it just anybody that owns the business? Do you do any individual work? Who should reach out to you?
We mainly do businesses and their owners and then their employees, because the businesses they're a little bit more complicated to do. They're the ones that we can work with and move things around or restructure them if they need some help doing that. But businesses and their owners. And we do work with quite a number of people in the service industry. We also work with quite a number of people in construction and manufacturing. Mm-hmm. We also have our clients that are in franchises. So we have a franchise, different kind of retail. Those are usually in the retail industry. Franchises, service, manufacturers. We have some retail and some in distribution, but quite a bit. There's also real estate. There's a lot of new laws coming out in the real estate area. Real estate has some great new depreciation rules and what can be written off as opposed to what needs to be capitalized and spread over a long-term period. Again, very pro-business.
Got it. And do you have I ask everyone this and no one is really quite sure what they want to say sometimes, but do you have a favorite client story you wanted to share or a fun story that you wanted to share for people to get to know you in the audience?
Well, we are constantly bringing in clients that need to have their tax returns amended or that need a restructuring happening. Kind of, a lot of times our stories are more sad than funny because we see where it's like, oh my
You're like
goodness,
fixing problems, yeah.
Overpaid. So we took on a client, their Texas franchise returns. If you look at your Texas franchise return, your cost of goods sold on your Texas franchise return should never match the cost of goods sold on your federal. If it does, it should be a red flag to you and you've got a problem. You need to come talk to somebody else or you need to switch CPAs. It should never be the same. If it's the same, your CPA has been lazy. That cost of goods sold on your Texas franchise return should be a line item by line item calculation. Say, what is going on here and what can I deduct? So that's one area we see a lot of issues. And then we took on this client that sells, he's a manufacturer and he sells his products all over the world, all over the United States and all over the world. Well, their CPA, and it was actually a CPA from a pretty large firm, told him he had to count all, it's like a $25 million company, all $25 million of that revenue is Texas revenue, even though he ships it to other states and to other countries. So he's been overpaying his franchise tax every year about $20,000 to $30,000. Very sad case. Thank goodness we could go back 4 years and amend. Sometimes I can get as far as 5, depending on the time of the year. But for him, we were able to go back 4 years and amend and get him some very significant money back. So that was a good story. Sometimes we see people and it's something we can't change. We can't go back and amend. But I said, you know what? We can always move forward with a good step and do something fun and good. Good for them for the future.
That is a good story.
Yeah.
That's a good one. So what if someone is thinking about reaching out to you and what's the best way for them to do that? How can they reach you?
Sure. They could call our main number, which is 214-731-7664, and just ask to set an appointment with me, Annie Fairchild. They could email me directly, Annie, ANNIE, at AFairchildPC.com. That's AFairchildPC.com. And I could see if I could just answer them really quickly, or we could look it over. We love just to sit down for coffee or here in our office and just chat and get to know a client, see if they want to continue with us or whatnot. But always that first time, they will leave with some good, solid information. We'll try to answer all their questions that they've got.
Awesome. Well, thank you very much for coming on the show. I'm glad to have you.
Well, it's great, Kristen, to be here. And for you doing this for all of your clients is pretty amazing to help spread the word and help them in their taxes and accounting.
Awesome. Thanks. Well, enjoy the rest of the winter season and good luck with tax season coming up in the spring.
Okay. Thanks a lot, Kristen. All right. Take care.
Thanks for hanging out with us, and I appreciate you listening to this episode. I would love to get some great feedback from you. Feel free to leave me a 5-star review on whatever podcast platform you're listening to this on. Also, any ideas or want to follow up on anything that happened in this episode, I would love to receive your emails. You can email me at kristen@ashtoncharles.co. Otherwise, I hope this episode has helped you be great in your business.